I'm sure by now you've seen the highlights, $500 days, 1,000, 10,000, $30,000 days from all these people. But here's the 5 truths I know to be true when trading futures. So let's get into today's video. Truth number 1 is leveraging works both ways. Yeah, it could help you make a lot of money, but it could easily help you lose a lot of money. If you're doing prop firm challenges, that is what will blow your account up. You're like, oh, I only have to make 3,000. I will do a couple contracts, 3, 4 contracts, scalp in and out, and then a little bit of drawdown. Boom, counts blown, daily drawdown limit hit, and you lose your account. And if you're in your personal account, well, you actually lost all your money. Truth number 2, and that is commissions add up. An example is, for example, on this chart, 20 micros or 2 contracts. Well, if you're trying to scalp, and I mean get in and out of the market quickly, it's better to use 2 contracts. You'll have less commission fees and you'll actually be able to scalp. If you scalp with 20 micros, depending on where you take profit, the fees are going to add up a lot and you might not even make money. You could just break even if you scalp or get chopped out at break even, right? Like move your stop loss. Break even with 20 micros is not break even. That's still negative because of the commissions. Also, if you're one to take a lot of trades, you got to keep that in mind as well, that say you're on a losing streak of 2-3 trades. Well, not only did you lose what you lost in that trade, but the commissions from each trade stack up, and now you're actually more in the red than you thought, and vice versa. Say you're in the red and you're trying to go back to break even on the day or have a little bit of green on the day. You might have a $600 loss and then a $620 win, but depending on how many micros you took or contracts or trades in between, you could still be red on the day because of the commission. So just be aware, you got to trade smart and make sure you're covering the commission costs when moving your stop loss. So that way break even is actually break even and not break even on the price where you actually end up in the red because of commissions. So be aware of that. Trade smart, trail smartly, and keep that in mind. Is it better just to trade 2 contracts, or is 20 micros the better way because you're actually kind of holding the trade for a little bit and you're okay paying the commission fees as you scale out of that position? Truth number 3, and this is the hardest thing of trading, and that is the emotional pressure you're going to put on yourself when trading. And there's no one answer to this. Everyone's different. There's many ways of gaining that mental strength and clarity trading needs, but you got to be aware of that. It's not just technical analysis. It's not an indicator on the chart. It's not the news. It's not this. It's you. You at the end of the day is what's going to make you profitable or not. So, for example, right now, price went out of the 15-minute range, chopped around. Now we're at the bottom of the 15-minute range and chopped around. There's a lot of lines just because I was doing 20 micros. So this was an initial win. I had a couple losses and then the wins and then the wins. What I'm trying to say is I saw through this trading that I was kind of trading the chop, trading the chop, trading the chop. I'm done for the day. I'm up. This account was down to 48,500, right around there. Might have been a little lower. We're back up in the green, halfway to passing, well, almost halfway to passing this account. I don't need to be greedy. If somehow we get out of this range by the PM session, then maybe we'll start trading. But for right now, I made enough money today. I'm making this video. I don't need to get chopped up and then lose what we made today, okay? So you got to be aware of that. I saw that I started becoming emotional, trying to scalp harder and harder. That's the first red flag for me. I'm like, okay, I'm not trading my plan. I got to get out. We got to get away from the charts. Let's do something that'll make us not trade. Also, if you are struggling with that mental side of trading, link down below. We do have an ebook on thefundedtrader.net. It'll help you go through the process of becoming a funded trader, but also the mental side of things and how to make sure you keep yourself in the game and don't blow these challenges up, and certainly pass the challenges and keep your accounts. But at the end of the day, it doesn't matter what you know, it's what you do with what you know. So you can learn all you want, you could have all the technical indicators you want, but if you yourself are not profitable, you're not going to be profitable. So master your mind, master the game. Truth number 4 is the market could stay irrational longer than you can stay funded. And what I mean by that is, let's just zoom out. Let's go to the 5-minute or 15-minute. Let's turn those executions off. Like even the 15-minute. Look at the market. Like look at these swings, right? And then even if we go over here to the NASDAQ, like look at these 100-point moves. That's a 100-point move, and we did that many times throughout the session. It's, you thought, okay, after this, the market's going to resettle and then we'll be back. But if you think about it, this was like 2,000 points. So even if we do come back and settle, we're still doing 100-point swings. So this is not normal. If we go back here and then look, much smaller moves, right? Throughout the whole day, let's say from the bottom 360 up to 519. Exactly, right? Now you come here and we did that type of move multiple times a day. Multiple times a day. Multiple times a day. Multiple times a day. Even in the chop. That's the hard part, is the chop is 100 points each way, candle after candle. It could stay irrational. So like I said, I noticed I was kind of getting played in those big chop ranges. So I am waiting for market to choose a side. I don't know if we're going to get a side, but I made my money and we got to get out. Truth number 5, and this is the last one, is a lot of people trade this as a hobby rather than their business or their job. Trading, yeah, you could get lucky and make some money just guessing, but the ones that stick around and actually continue to make profits and don't get challenge blown up after challenge blown up, or funded counts lost, or personal capital blow up, are the ones that treat this seriously. You got to be a risk manager. This is a job. This is your business, and you got to treat it like that. You don't create any other business and just show up and guess every day. You figure out what works, you create a system, and then you work that system and then scale that system. Same thing with trading. You got to build your system, figure out what works, get that consistency, and then scale that system to make more and more money as your business grows. Can't treat this as a hobby. You got to take it serious. And again, the mental side of trading, you got to treat it like it's a real business, and your mind will start to trade like a business. So you'll stop taking huge risks that you wouldn't do in any other thing. You won't even do it in your normal life. When you have a chance to grow, then there's a risk and you just don't want to do it, right? But for some reason, because this is just colors on a screen and a button to press, for some reason there's a detach of the risk in with trading, and you need to be smart and you need to control your risk. Be risk managers rather than gamble on moonshots and try to get so much money that way that all your losses are wiped out. It's not the way to trade. Consistent profits is the way to trade, and when you lose, minimize that as small as possible, and you're going to see it doesn't matter how much you make on trades. That is all going to start stacking as long as you focus on not losing too much on trades. And when you are green, you're managing that risk, so you start to lock in profit, scale out, trail your stop loss, whatever your system is. Take the risk, lock in profits, and let the market do its thing. That's going to make you that good trader. That's going to make you that consistent trader that you're trying to get, but you're not quite there yet because you're not treating it like a business, and you're not treating this like it's a job. Because at the end of the day, it's going to be your new job. If you're trying to replace your work, the job you're at with trading, It's not some magic thing. It's just a new job, but now you're working for yourself. So now you have to be extra smart because there's not a manager or boss to yell at you. I mean, there's the prop firm rules that will tell you you failed, but you are the boss. You are the one that has to keep yourself in check. So you have to treat it like that. Like when you show up, you're the employee, and then you got to have your manager mindset up here, controlling you, the person that's at the chart trading, and keep yourself in check. And the better you could do that, the better you will have a chance at becoming successful in futures trading, Forex trading, stock market trading, investing, anything to do with financial gaining from investing or just trading. You got to be smart with money. It's a whole different beast compared to a different job or a different business because you see this number go up and down and it fluctuates so much, and you see the profit, you see the loss, that red, green. There's just so much. It's like a casino. There's so much stimulation going on. You got to stay in control, keep calm, and don't let all that noise affect you. Execute your plan, get out, thank the market, thank yourself for sticking to the plan, be grateful, move on into the next trading day, trading session. So I don't say all this to scare you. I say all this because I want you to succeed and I want you to start taking this seriously. If you are newer to trading or just struggling with your consistency, go to thefunandtrader.net. We have a playbook. That's the Fun and Trader playbook. Talks about the mindset and what it goes into managing your risk, passing challenges, and keeping your funded accounts. And we also have a course that goes with it. There's also an indicator we have that I could show you real quick. It shows you the swings of the market, helps you identify where the actual trends are and not the chop zones or the pullbacks. Um, but because of this market and we're swinging and we're kind of just ranging right now, you could see it's not a good time to trade. We're sitting on the VWAP. We're sitting on the higher time frame EMA. So we're in a consolidation zone right now. So you can't really trust these trends unless you go down to a smaller time frame and you could start to see some moves to take. These are counter trends because we're above the VWAP. Once we break below, turns red, get a little bit of money, kind of still sitting around that VWAP. So you got to keep in mind, this is a perfect example that it doesn't matter what indicator you have. If you're in a chop zone, you're in a chop zone. The indicator's not going to fire off these amazing signals until we start getting in a trending market, right? We're starting to get actual moves and then kind of that pullback. So check that link down below. Subscribe if you haven't. Click that thumbs up. And I hope you have a great day and a great week of trading.
Like and subscribe.